Bitcoin remains above 30k despite Biden targeting crypto with taxes and a surging US GDP. Let's jump into it. So the latest White House economic plan is specifically targeted closing crypto tax loopholes, including wash trading. Wash trading is where you simultaneously sell assets as you buy them, either to manipulate the market or, in this example, to dodge a tax bill. A few weeks ago, this would have hit price hard, but the massive institutional moves into Bitcoin trading via ETFs have provided solid price support through both whale account and ETF provider accumulation, as well as other traders FOMOing in anticipation of the inevitable ETF pump. We also avoided a breakdown on the back of higher than expected GDP figures. Again, this would usually have sunk price. A strong economy in this climate means that interest rates go up, which means that the dollar pumps and risk assets fall. Except that Bitcoin held firm against this, supported by the bullish ETF sentiment. Other risk assets, for example gold, tanked almost 0.75% on the news, and despite this kind of bounce recovery, has continued to trade down since the news dropped. It seems that the upshot of all this institutional adoption of Bitcoin is that it's really becoming its own thing and decoupling again from gold and equities. Becoming a unique asset class is extremely bullish for Bitcoin as it becomes necessary to hold Bitcoin to fully diversify your portfolio. K33 Research have recently published analysis showing that the US market hours are really driving Bitcoin price, accounting for over 50% of Bitcoin volume as BlackRock, Fidelity and Citadel move into crypto and are pulling in both volume and consumer confidence. If we look at this Pearson chart, we can see the correlation between Bitcoin and other assets. If the lines are up here closer to 1, then they're highly correlated. At 0, they're not correlated at all, and -1 gives an inverse correlation, i.e. they're moving against each other. We can see that currently Bitcoin and gold are inversely correlated. Conditions should be bearish for store of value assets like gold and previously Bitcoin. However, the spot ETF applications are keeping Bitcoin above water and above 30k. The Nasdaq and the S&P are loosely correlated with Bitcoin now, with both indexes up, having responded positively to the positive GDP news. On the Bitcoin chart, we can see we've got clear defined support at around 29.8k. and very strong resistance at 31.2k. Having had this double tap of the support, we could potentially be going for a double bottom formation, which would give us the juice needed to break out of the resistance above. Currently, I'm extremely bullish. I think not capitulating in the face of these direct negatives suggests that price will pump invariably and break its current range once we have no big kind of bearish headwinds in the way. I think given the nature of the news cycle, Bitcoin's response is incredibly bullish, and my target remains 35,900 or the top of the old and filled CME gap that we've highlighted in previous videos. Thanks for watching. Don't forget to like the video if it's of any use and join the free Discord community to get access to all of our free trade signals and our free, helpful, friendly community. Thanks. Bye.